The good thing about a pension scheme is that it has a long gestation, because you've just started, maybe you just come out of university, you've just started paying your pensions. You're going to be working for maybe 20, 30 years before you retire. That money is then being able to be invested for 20, 30 years. So you can invest it in long-term things like infrastructure build. You can invest it in things like power, airlines, and that's what happens across the world.
I signed up for the pension scheme sometimes in 2013 after I completed my youth service, and I joined the workforce in Ogun State, joined a private organization, and so far so good. I'm enjoying the pension scheme. My employer contributes a certain quota, while of course I also, from my monthly salary, I contribute a quota, and I'm getting constant feedback from the company managing the pension. Occasionally they send me a mail and I get a regular alert of the deductions on a monthly basis, and also the company do send representatives once in a while to come to my organization to brief us on the interest on the savings, and then to brief us on things that we can access, like we can access 25% or so of the money contributed so far for mortgage purposes only.
I have pension, and pension is one important scheme that have helped people to maximize their work years, so that when you finish working as at old age, you have a stipend to help yourself and your family.
Because somebody will not remain young forever, so you have to put things in order that when you are growing old, those things will be helping you organize yourself. Because sometimes people will do I hope on children can disappoint, but we will not pray for such. So but the issue, when you are young working or doing business, you have to have landing properties, houses, so that when you are growing old, your age will reach, you cannot be able to work again. So that thing will be giving you, sustaining you, so help you to grow old. That is my own understanding about pension.
Not all companies give pension, if I'm not mistaken, Abi. Not all companies. So I prefer part-time job than doing a full-time job for pension.
I see pension as something that's payment that is being given to someone who retires, maybe as a result of you have worked with the company for some certain time, and then when you retire, you don't have any source of income again.
Pension should actually what what you get to sit back to enjoy after numerous years of works, and I believe it's something everybody should get involved in. You're just having a particular amount of your money being invested for you till you're not being able to work again, and I think that's something we should all try and work towards and start doing, because it secures our future.
For those who are here to sign up, I think they are not doing they are doing a kind of disservice to themselves, because as you are working today, the strength will not remain the same. So you need to think about tomorrow. And since we don't have a social structure on a larger scale for all Nigerian working class, if you belong to private sector, you need to, as a matter of urgency, in my own opinion, sign up with a pension scheme, because there is a tomorrow.
Majority of all the parastatals now are embracing pension because it's very important. But if at all you are not working or you are a businessman, it's very important to identify with one pension scheme or the other, where you can be saving little by little for yourself in the future. Because these days, future is not really guaranteed. You can't really say my children are growing up to come and help me because of the situation of things. So you can help yourself during your active years.
This is Nigeria, and there are a lot of fakes and a lot of originals. So if you are actually insure yourself with the right people, definitely you get your money's worth, definitely. And I think I had an experience with someone in my church. He worked in Ibadan then, so he worked with University of Ibadan Teaching Hospital. And when he retired, I know what he enjoyed. And in his later years, he didn't have to suffer for anything. He was able to cater for his children, his wives, and he had 2 wives, I think, yes. So he catered for them with what he got from his pension.
Feedback from some of those who have retired or who have switched employment, the transition or the process of assessing I think about 75% of the money after retirement has been smooth so far. I think they will just demand for a letter that you have completed your, you have retired, and then also some documentations like, your letter of employment, things that will show that you have indeed completed the exercise. For private organizations, whether large scale or medium scale or small scale, who are yet to sign up their employees for pension scheme, I think they are violating the federal government law, because federal government signed it back in 2003 under Obasanjo regime that, once you are an established organization in Nigeria and you have, a workforce and you've been in existence for a little number of years, there are criteria you need to, because it's not just about building your organization alone. You need to think of how will these people live thereafter. So I think my advice for, organization, private businessmen and women out there is for them to just take that initiative. Orientate your employees, let them know that they need to also contribute while you also contribute a quota. And I think that way they'll be able to give their best to your organization, to whatever product or service that you represent. People will be able to work for you wholeheartedly. They'll be able to go all out to help you to build your brand, because they know their tomorrow is secured. So all business owners out there, I think you need to have a rethink, sit down with your employees, orientate them, let them know the portion they need to contribute, and also from your own profit or from your own regular income, contribute a little, so that 20, 30 years down the line, there will be a smile on their face, and your organization also will still be standing.
Right, that was an interesting thing to hear from Nigerians. But beyond being a fund resulting into which amounts are paid regularly during an individual's working career, and from which periodic payments are made to support the person's retirement from work, pensions have become a critical segment to the financial services industry, mobilizing national savings for national development. For countries like Nigeria, the reform of the pension industry in 2004 and subsequent innovation and policy plans implemented by the regulator, the National Pension Commission, have led to a transformation, with the industry asset size now at about 29.52 trillion naira. With success in the contributory pension scheme covering the public and private sector in the country, this impact needs to translate into attracting the young population that constitutes the working class and the informal sector, including market women, artisans, and farmers, among others. Hello, and thank you for joining us on WebTV Focus. I am Gabriel, Jude from Lagos, Nigeria, and today we shall be looking into repositioning the Nigerian pension industry for young population and informal sector. And my guest today is Mr. Tunji Andrews, CEO of Awabah Pension. You're welcome to the program.
Thank you for having me.
So since 2004, the Pension Reform Act, we've seen the establishment of the National Pension Commission. But could you walk us through this process from the evolution of the pension industry, its role as a catalyst for mobilizing national savings and also supporting economic development, if there has been some development in that regard?
That's a lot of questions. But to begin with, to speak about the evolution. Prior to the Pension Reform Act, what we had was the system where, the government would, just promise the workers pensions. There would be no contribution from the government side or the workers side. So when you then retire, you are expected to just get pensions because, the government will be paying it. Those systems are unsustainable because there's no money being put aside on a regular basis. And then, when pensioners now show up, the organization needs to then allocate the same way it is setting aside money for salaries every year. It needs to set aside money for paying pensioners. But then, after the 2004 Reform Act, we came about what we call the contributory pension scheme, where the employer and the employee contribute a percentage of the salary every month, and it is put aside with a pension fund administrator who then takes that money, invests it in, profitable schemes. Then that money is then compounded over a period of time. And then when the person retires, that money is then put together. A part is paid to them immediately as lump sum, and then the rest is paid as monthly payments. The great thing about that is that since that time, we've now accumulated well over, I think, depending on the exchange rate, we've accumulated well over $35 billion in terms of total pension savings, which is what we now call the national part of the national savings. What this has done is that, and it's not only, Nigeria, it's a global phenomenon where pension funds are usually the single largest domestic source of investment. And in Nigeria, it is also the same way. So you find out that our pension scheme has so much to offer in terms of equity investments, in terms of bond market investments, in terms of investing in, long-term infrastructure. Because the good thing about a pension scheme is that it has a long gestation. Because you've just started, maybe you just come out of university, you've just started paying your pensions. You're going to be working for maybe 20, 30 years before you retire. That money is then being able to be invested for 20, 30 years. So you can invest it in long-term things like infrastructure build. You can invest in things like power, airlines, and that's what happens across the world. South Africa is a fantastic example. South Africa's pension funds invest a large portion in the capital market in South Africa, which is why South Africa's capital market is really booming. And then you find that depth of funds in South Africa. So we are growing Nigeria's pension savings. Right now, we have about 12 million people who are in the scheme, mostly formal workers. That's people who are in the 95. But for the pension regulator recently created a subcategory, sub-license, which is called the accredited pension agents, which is what Awabah is. Now we are charged with bringing informal sector workers into the national pension scheme through the personal pension plan. So we're hoping that we can be able to double what the formal sector has done, and increase the number of people in the pension scheme to well over 20 million, and hopefully that will increase the savings and increase national development also.
With what you said, has immense potential in especially the national savings. But then, while growing up, coming from the north, so I understand that even though there was limited knowledge of pension, so what we know, that we used to know while growing up, was that except you were working with the public sector, you have pension. So until recently, I got to understand that there are private pension scheme and all of that. From 2004, so that is down 22 years down the line. What has been the place of awareness of this scheme, especially to younger population?
Yes. So I watched your Vox Pop, and I was surprised that everybody seemed to know about pensions. When we started Awabah in 2021, there was very little understanding on the streets, especially with the kind of people you were speaking with. But there has been a little bit more sensitization. The National Pension Commission is doing fantastic work, sensitizing informal sector workers across the nation. They do that on a regular basis. For the International Women's Day, the National Pension Commission did an entire drive across the country, going to 13 states, doing drive of sensitizing people, mostly women, sensitizing them on why they should be part of the personal pension scheme. And they continue to do that. The pension fund administrators also are doing a lot of work, and you have to give them their flowers for how they've been at the forefront of pushing the informal sector pensions. But again, we are now here, and our goal is to be able to do a lot more in terms of sensitization. We went around the country with the National Pension Commission for the IWD drive. We are doing something similar in the coming weeks. From tomorrow and over the next 10 days, we'll be doing something similar, going to Kaduna, Maduguri, Oyo, Kwara, Abuja, Lagos, Akwa Ibom. We're going across the state doing the same thing. It will take time. It will take time, but we believe that all these little drops of, that we're putting across the country will go across to show more people. Now, what we want to be able to do is to make pensions as understandable as banking. So the way everybody uses a bank app and they know that I transfer money and I do this.
Especially with fintechs.
Exactly. So, and the good thing about it is that we're also technology enabled. So we want everybody to know how to use pensions. One of the great things that we've been able to do is that we've been able to co-create a product with the Team App / MoneyPoint team. Where you can go to any MoneyPoint POS across the country and pay for pensions. Okay. You can go to any MoneyPoint POS across the country and on board. So you want to sign up to any PFA, for instance. You go to a MoneyPoint POS, you tell them I want to sign up to blah, blah, blah PFA, and they will sign you up. You provide your NIN, your phone number, they'll take a picture, boom.
So how is it going to be the return like?
The return?
Yes.
All right. So the great thing about it is that the same investment engine that invests the one for workers is the same investment engine that is doing the private pensions.
Okay.
So you enjoy the same benefits. Now, even the greater part is that for corporate pensions, that's the CPS, you can take 25% as equity contribution towards a mortgage, and you can only get money out if you are out of work for a period of time. With the private pension, at any point after the first 3 months, you can withdraw 50% of the money. So there's one small, you are doing your business, you need quick cash, I have small here, and it is generating the profit that is required. So you can quickly take 50% and invest it. So I think it is something that people will be excited about, being a part of, but you can't be a part of what you don't know about. So our job right now is to go around the country and educate people on how personal pension works.
So I will be coming to that, the issue of how you get your money, at when, at what time, and how do you do that. But then PenCom said about 7 states in the country have implemented the pension scheme. So can you walk us through that? Do you have, aside what you do, just talk about
Yes. So basically it's the core context of the contributory pension system. So some state governments are still using the old system, where they pay pensions out of their flow. Right? The contributory pension scheme is one that allows a proper pension fund administrator manage your pensions. So you contribute on a regular basis, and then the payments go into that system. So what it means is that every month, the government will pay its own share, and then deductions will be made from the staff into that pot. So it is not, in fact, at the end of your lifetime as a worker, you don't even need to go to the state government to ask. You just go to your PFA. I've finished my tenure. Where's my money? Because it is with them, and they will be the ones to give you updates. They will be sending you alerts when your contributions have been made. As a pension industry, hope that all the states of the federation will, be onboarded on this, because it's easier for them. But of course, it means that you also need to hold yourself accountable, because every month you must contribute or there will be penalties. So there are things around it that are critical. And I believe that with the 13 states right now, we will see more join, and we'll have a better system.
Okay, that sounds interesting. But then we've been seeing a lot of emphasis on micro pension as a key opportunities to deepen the pension industry penetration. speak to us, I mean, on how industry players, just like you started saying something about Awabah and other stakeholders in deepening, disconnecting the informal sector, the formal sector, young people, you know, and what are some of the, I want to specifically state some of the challenges because, you know, when you watch the Vox Pop, there are other contradictory, you know, statement that was made pertaining the pension. So speak to us.
So, like I said, we've been doing this since 2021, so we've learned a lot. And it's no longer called micro pensions, it's now called the personal pension scheme.
Right.
The fantastic thing about it is that from the people we have onboarded so far, they love the product. We just need to educate people more. And when I say educate people more, we need to put the technology in their hands and make it easy for them to contribute. The reason why banking is as known and as everywhere as it is that if I save money in my bank, I don't necessarily need to go to the bank branch to collect my money. Even if my phone is down, I can use my card. Even if my card is down, I can use POS. There are many ways there's access to the conversation. And where we are is layering the technology to provide that access. So the first thing, like I said, you want a situation whereby they can now go to any money point POS and pay. That psychologically tells them your pension fund administrator is close to you. It's a psychological thing because I don't have to go far. It now starts bringing the pension conversation closer to home. We've already done it with ATMs, but most people don't go to ATMs as much as they used to, but POS is still a thing. We want to make the hands of everybody in their phones. So one of the things banking has done is that banking feels instant, right? So if I transfer money from bank A to bank B, what you see as the customer is that the money has gone quickly, right? And I'm going to ruin this experience for a lot of people now. But that isn't what happens. The money is moving from bank A, settlement account 1, to bank A, settlement account 2. Then there's a signal sent to bank B to move money from settlement account 1 to settlement account 2. What you see is
a lot.
But that movement is managed by a whole ecosystem to be able to give you that instant feel.
Is that the reason you see debit, you don't see the money?
Sometimes. Because of that, the money doesn't move instantly.
Okay,
there's a settlement at the end of the day, but because I have money here and I have money that you can debit me, credit me here, debit me, credit here. You get? So that is what happens. And we want to be able to create that feeling of instant, pensions with customers. So we're now...
I want to be the bank.
Not be the bank, but we want to be the...
pensions. You want to
beat the bank. Yes, we're going close to it. So for instance, I told you that for personal pension customers, they can withdraw up to 50% at any point in time. Our goal is now with the regulator, we're building the infrastructure to be able to ensure that that money is instant. So you request for your 30%. Right now, it's a T+2. So you request today, you get it in 3 days' time. I'm like, we need to make it instant. So you request now, boom, it has entered your account. How it happens, leave us. We will discuss it at the back. But you need your money now, you get your money now.
So that's an interesting thing now. Here is my question, right? A lot of people have been doing this pension thing for a long time. Yes. And so peradventure, you are caught up with some financial, issues you want to... And then you were thinking, I have been saving this money, and then I needed something. That money cannot be there. I'm sitting there and watching, I'm suffering. So how can that person in that position get that money to solve that particular problem, to do something with it?
So if it's a personal pension plan, immediately reach out to your PFA and request for up to 50% of your money. They will give it to you within 3 days.
On you say
Then you
while
don't need
working or you
you do, as long as it's a personal pension plan, you
Okay.
don't need to explain anything to anybody. You don't need
Right.
to. You don't even need to tell them why you need the money.
Mhm.
It is your money. So it's a personal pension plan. I've saved it. Give me 50% of my money. Boom, you get it back. You can do that, I think, twice every quarter or so. I can't remember. Yeah, twice every quarter. But for the one where you are in a CPS, where you are a 9-to-5 employee, there are protocols to it. Right now, I think you have to be out of work for maybe 6 months to be able to get 25% or so, or you have retired. There are protocols to it. You can't just get your money like that. But for the voluntary side, I think you can, because it's now PPP, it's now been moved to the PPP, you can withdraw some part of it because it's voluntary. You did it by yourself.
give us a hope of a date. I mean, is it month, year for an employee who wanted? If you maybe
So for the employee part, if you've not been in work for 6 months, you can get 25%. If you've retired, you can get of course, you get your money. But if you're still working, there are still restrictions around it for now. For now. However, your voluntary contribution, I think, is now that it's PPP, you can be able to get part of it. But yes, you will need to ask your PFA how that works.
okay, I think we'll come to you for the personal pension. And now let's talk. So, what is your take on the level of, pension reform, that tax pension revolution 2.0?
Yes.
That prioritize, income adequacy. You see healthcare access and border inclusion.
Yes.
Cost of living and all of that. What's your take on that?
So Pension Revolution 2.0 was something that was chaired by the National Pension Commission under the DG now. But it was the entire pension industry that came together and said, we need to broaden pension penetration in Nigeria. How do we do it? So there were things that were decided, capital adequacy was moved, room for investing in different things was also open. The personal pension system was evolved. Even retirees benefited from the Pension Revolution 2.0. People who had been, receiving their payout for a long time, inflation has eroded their money. Some of them were increased and they were paid the lump sum payouts immediately.
Yeah.
So Pension Revolution 2.0 was a fantastic situation for the pension industry. And we'll continue to see the effects as we go, because now conversations around pension funds investing in, agriculture-driven funds, infrastructure-driven funds are now a conversation at the table, because everybody is now looking, how do we diversify? We can't just be investing in government bonds alone. How do we, develop the economy? So that is it. I'm excited to see all sorts of infrastructure funds, power projects now going to pitch to pension funds and saying, we need to raise this amount of money, come and invest in this fund so that we can go and do this road, we can create this IPP, this farm is supposed to be built in some place, because that's what you want. You don't just want the money to just grow and grow and grow. You want it to grow, yes, but at the same time, as it's growing, can we use it to develop Nigeria and still grow the money at the same time? So you have, double effect for the money. And that's what we're now moving towards. So for me, I think the industry will be better for Pension Revolution 2.0. I didn't see it coming. It's not something I expected would happen, but I'm super pleased it's here.
Okay. So I was going to say that how has that affected you?
I have a license now, so.
Okay. Now let me deviate a little bit. Pension fund assets through investment made by pension fund administrators in treasury bills issued by the Central Bank of Nigeria that we've seen. When you go to all these stock apps, you see treasury bills, you will see bonds, you see Sukuk, and approved by SEC, Security and Exchange Commission, and other institutions. So what is the relevance to the economy?
The truth about it is that pension funds must be invested in something, right? And depending on what they invest in is where I have a worry with. So for instance, the government will raise bonds. From time to time, treasury bills, the government will raise for whatever reason, maybe to pay salaries or whatever. And pension funds will invest. They will buy the bonds. They will buy the treasury bills. I think that is a guaranteed way of increasing capital, because the government will need extra money to be able to fund its obligations. I think that especially, just speaking to Pension Revolution 2.0, I think it's not enough for pension funds to just increase the money that is with them anymore. I think it is only fine that we increase the money that is in custody, but increase it in such a way that the vehicle to which we increased it with, we can look back at it and say, we invested in that thing and see what it has done. Or like a project that we are all proud of, like the refinery by Aliko Dangote. Imagine if the pension funds were a significant investor in that project. We would all be able to, everybody that is contributing to pensions in Nigeria know that they are part of that refinery. You get, it is our money that built this refinery. Those are the psychological buy-ins that you have as a nation towards. So in Ghana, they did something and built low-cost housing using pension funds. Those kind of things, when you move into that house, it's not, you will buy the house, but knowing that you bought the house because my pensions were somewhere, and then when you're driving past such a project and you see the big houses being built, you're thinking to yourself, my money is inside. My money is part of it. Even though you are not directly involved in it, just because you know that your pension fund is here, and then they've used that to invest in this, and this has built this, you will still get the returns. But there's that feel-good factor from the national perspective that I feel is critical. So yes, invest in bonds, sukuk, all of that. But can we push more of it towards verifiable, traceable, more tangible projects that we can all physically see?
Because I was going to ask if you really trust the investment side of using pension fund, because is it one of the issues we had with the time where pension were not paid to so many people?
No. That is unlikely to happen. Here's two things. So when you invest in government, when government puts up treasury bills or bonds, the government itself has to fail for them not to pay you, right? And we know that's not going to happen. So you will get your money back. But it's almost a lazy way to make money. You get? Now, because it's such a lazy way to make money, you can't also follow government. After you've given them the money, it's now up to them to use it. You can't now be following them. Hey, that money I gave you, what did you use it for? You get? That's a difference. But if the government, because the government is trying to borrow a certain amount now for I think there's a new road similar to the coastal road that they are trying to build. Now that is a project that you can get behind. You get, and you know this is for the specific purpose of this road, right? The government will still pay it back, just the same way they will pay back the other one, right? But this one, it is tied to something that is in front of you and you can see. I'm saying, can we do more of that? Can we focus more on projects? Can we focus more on development? Can we focus more on things that will give a multiplier effect for the economy? That's big for me. Exactly. Electricity, roads, schools, hospitals, those things that we all know that are important. Refineries, we need more. Aliko has done well, but we need more. Let's be a net exporter of oil and gas. It's critical for us.
I think pensioners, contributors will appreciate that if those monies are used for.
Imagine telling you, see, instead of just coming to, because the Vox Pop said, they will come and say, Look at the interest you've made from the money. But imagine if that presentation was done and it said, oh, you've made 17% interest this year, but we invested in this, we invested in this. Look at this project. See, when we invested in it was at foundation level, but it has now gotten here. That will give you a greater feeling of inclusion in whatever is happening. So I think that's critical.
Okay, so as we going down, why is pension important for people as part of the financial planning? You know, so coming from an expert, which is you, we heard from the Vox Populi.
Yes,
so tell us.
So I think really pensions, I've always said that pensions is something you rather have and not need than need and not have. Now, so it's better you have it and you now have too much resources that is like extra than you now need it and it's not there. So like the African equivalent of pensions is to have many children. You have many children and you hope that one will do well and take care of you in old age. That's why you see many houses, they will have 7 children, 8 children, so that at least one. Let's spread the chances of one will come and take care of us. We are seeing that the world is flipping to the point where children, and it's not their fault, it's just the orientation. Children are taking care of their parents less and less. You don't want to get there and your child doesn't have time for you. You get? And there's something called old age poverty. When you don't have money and you're young, you can go out, you can quickly hustle 1 or 2. But when you're 78, 92, even if you want to, you can't do anything. So at that point, it is critical that you have, and we do not want a large population of old people on our hands. Right now, the statistics show that our population is largely, demographed around 15 and 35. They will not be 15 and 35 forever. They will one day be 60. They will one day be 50. Imagine when all of them move to 60 and many of them are poor. You know what it's going to do to our healthcare, what it's going to do to our care system. So it's important that as a national collective, pensions is driven into the hearts of people. It's better to have it and you are like, okay, my children are taking care of me, it's fine, than your children have decided they are moving to Canada. Exactly. And you need to sort yourself out and you don't have anything to take care of yourself. It's very critical.
Thank you so much. Thank you so much, Mr. Tunji Andrews, CEO of Awabah Pensions, for your time and sharing your expertise with us. Is indeed a very profound conversation, and we hope that we'll do this again.
Yes, pleasure.
That will be all for this edition of WebTV Focus program. For more knowledge on finance, the market, banking, the economy, and investing, please visit the brochure website. Watch WebTV on YouTube and follow our social media platforms displayed on the screen. Thank you everyone for watching. I am Gabriel Jude. Have a great day.